more cash flow for retirees. I said more cash flow for retirees. People who are retired can possibly receive more cash flow. Hello, you got Mr. Smith, point five of Mr. and Mrs. Smith. And in this brief video, I want to talk about how people who are retired can possibly still increase their cash flow. Because here's the thing. A lot of people who are retired on a fixed income or they're, squeezing and kind of still living paycheck to paycheck, and they don't realize that they may be leaving money on the table. Now, most of the people who tune into our channel are not even anywhere close to retirement age. However, if you're not of retirement age, I'm sure you have a loved one who is, a parent who is. And if that's the case, then share this with them and just let them know that this is possible based on their scenario. Because the fact of the matter is, if you don't know, then you just don't know what you're missing out on. And I think this can really be beneficial to many. And it was brought to my attention that we hadn't done a video pertaining to this topic. And I was like, that is a good angle for us to take, even though it may not fit our audience directly. Their parents may be affected by this. And if it can help them bring in more cash flow, which can lighten their load in many other areas, then I definitely want to do my part. So share this with somebody who you feel may benefit, whether it's a child of someone who's retired or whether it's a family member who is retired. So what am I talking about? How do you create more cash flow even if you are retired? Well, we've done quite a few videos pertaining to the W-4, the tax withholding form that most people fill out when they get their job. Well, if you're retired and you're receiving some form of a pension, then it's a good chance that you are still paying taxes on that pension, which means that it's still affected by this form, by this document that has been given by the IRS. And the IRS has made it a lot easier, especially when using the tax withholding estimator, which I'll go through in this video. They made it fairly easy on making this thing happen and you seeing exactly what to expect in terms of you increasing your cash flow and what the result of increasing your cash flow may be depending on your scenario. So the IRS has definitely done a great thing. And depending on when you're watching this video, this is the 2020 W-4 that we'll be reviewing and going through the estimator based on the 2020 guidelines. Now, let me show you a glimpse of the W-4 because the W-4 is very similar to the original W-4, but this one is the W-4P, which stands for pension. So if a person is receiving pension or annuity payments and is being taxed, then you might want to consider filling this out. Because once you fill this out, then you can have the proper amount of taxes being withheld versus being overtaxed, which is the case for many people. Now, I won't put you through the stresses of filling this out, this form out by itself. And I say stresses in quotes, because if it's bringing in more cash flow, then it's all worth it. But the calculator makes this easy, but this is how it looks. And you can pretty much look this up online. You can use DuckDuckGo, Google, whatever search platform that you use and find this form, or you can go directly to the IRS website, fill out this form. But the form that I'm about to go over, the estimator that I'm about to use, basically will fill in the blanks for you. You print it out, it'll print out a pre-filled version for you, so you don't have to worry about it. And if it prints it out, well, once it's printed out, you'll be able to just understand exactly how to go about making sure that you increase your cash flow based on this information. So I don't want to get ahead of myself in the video. But basically, all I did was came to the IRS website, or I looked up the W-4 estimator, and it brought me to this screen that you see right here. And I'm going to just go straight through because I don't want the video to be too long, but I want to just give you an understanding of what to expect, what it looks like, how you can best benefit from this scenario. But once you type it in or go to the IRS site, you'll come to this page. If you type in tax withholding estimator or W-4 estimator or W-4 calculator, and once you click on the link that pops up, it'll bring you here. And all you're going to do is click on use the tax withholding estimator. The tax withholding estimator is basically going to collect your information and you fill it out accordingly. The more honest you are with the system, the more honest the results will be as pertains to your situation. So just be honest with the system and it'll be pretty self-explanatory step by step, and hopefully this video does you some good. So the first thing they want to know is, who are you? It's about you, and you're not putting in any personal information, social security, name, things of that nature. You're just putting in your situation. And once you put in your situation, it'll work out an equation. Now, number one, filing status. What filing status will you use for your tax return? And I'm assuming that this person is married filing jointly, and that'll be their filing status. If yours is anything different, by all means, make it fit your scenario. And if it's anything that you're in doubt about, you can always click on the help tip to kind of get an understanding of what the question is asking if you have questions about anything. I think it's pretty self-explanatory, but just in case, I want you to know that that tab exists. Can someone else claim you as a dependent on their tax return? The answer to this is no. Dependent. Do you plan to claim any dependents on your tax return? I'm going to assume that this person might be retired and they may have an empty net, meaning that everybody is of age to claim themselves, so they won't be claiming any dependents on their tax return. If you are, then just fill it out accordingly. Do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? Now, for the typical person who has a job, they will put yes because they're receiving income. However, for a person who is retired, then they would select no because the pension is where they want to spend their time at. So basically, will you or your spouse receive income from a pension this year? So right here, we select yes. This is the person who's retired, so we select yes on the pension area. And everything else looks pretty much the same going forward, but I'm still going to go through it just for the sake of understanding. How many pensions do you anticipate receiving, or how many pensions do you anticipate receiving income from this year? So I'm going to assume that this person only has one job that they retire from, so it'll be one pension. If you have multiple, then select it, but for this person, it's one. How many pensions does your spouse anticipate receiving income from this year? And one for the spouse as well. So they both retired and they both have one pension coming in. Number 5, check all that apply to you and your spouse, other sources of income and tax payments. Now, fill this out accordingly, like I stated, but on this one, I'm going to leave it blank. However, this is just the IRS way of saying they want to know about all of your income. They want to know about all the income that you earn because they just want to know and make sure that you're being taxed appropriately. I'll say that. But you can just kind of read over some of these things. Will you receive Social Security benefits this year? Will your spouse receive that? Will you receive a scholarship or a grant that must be counted as income? Will you collect unemployment compensation? So it lists everything, even earning net income from self-employment, because many people who are retired, they pick up some type of self-employment income on the side to kind of supplement. And this might help a person who doesn't necessarily want to pick up a separate form of income, create more cash flow that will keep them from having to pick up another form of income. It's just all based on personal preference. But those are the things that are listed. Then it talks about the demographics. I will be 65 or older on January the 1st. My spouse will be 65 or older. So click that if it fits your situation. But I'm going to assume this person is 60 years old or 61 years old. They're retired. They won't be 65 or older by that date. And I'm just going to select next because I want to keep it simple. So your pension. You'll hit the plus sign to expand that. And it says, do you expect to receive this pension all year? Yes. How frequently do you receive pension payments? We're going to say once a month. If it's every 2 weeks for you, put that. But for this, we'll just say once a month. What is the end date of your most recent pension statement? So the end date for the most recent pension statement, we're going to select the end of last month. Enter the total annual pre-tax pension payment. So this is the total, and basically I hit the question mark at pension. Enter the gross amount that you receive annually in payments from this pension. Use the amount of your pension payment before any taxes, benefits, or other items are subtracted. So this is the gross. This is everything, the pre-tax pension payment. So on this, I'm just gonna put in 48,000. Just using a number. I'm creating this video off the hip just because I feel like it'll help quite a few people. Using your last pension statement into the federal income taxes withheld. So year to date, let's assume that they're being taxed $400 a month. So they've been paid at, it's currently the month of June for $400 a month. They, over 5 months, it's been $2,000 that have been taken out. So year to date, this is the federal income taxes that have been withheld. And you'll have your stubs in front of you. That's something I failed to mention at the beginning. Have your stubs in front of you so you'll know exactly. You won't be guessing. I'm just coming up with numbers and doing the math. You won't be guessing. You'll be able to see exactly. This pay period ended here. This is exactly how much came out federal. And then basically per pay period, since it's monthly, then I just said that 400 comes out a month in taxes. So per pay period, $400. And we're going to do the exact same thing for the spouse. Does your spouse anticipate collecting this pension all year? Yes. How frequently does your spouse get paid? Will be once a month. We'll also select that the pay period ended on the same day. Because I want to keep this very simple, and you'll know based on your scenario what is right for you. Enter your spouse total annual pre-tax pension payment. So we'll say that her gross, his or her gross, was $48,000 as well. Year to date, $2,000 has been taken out federally. Per pay period, $400. Then we'll hit next. Adjustments to income. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? I'm going to go ahead and click this just so you can see the possible adjustments to income. And you'll see these are things that if you enter an amount, it'll offset or possibly offset what your tax liability will be anyway. But I won't put anything here. I just wanted to expand on it just so you can see it. So instead, I'm going to click go to next step. And I'm going to do the same for deductions from income. Deductions, basically it says you qualify for a standard deduction of $24,800. If you understand standard deductions, that's basically everyone's right to be able to have a standard amount that offsets their tax liability based on their filing status. So that includes a person who may be single, head of household, married filing jointly, married filing separately, married with children. All of these people have a certain standard deduction that they qualify for, and it's different for each one based on their filing status. And in many cases, the standard deduction is better than itemizing. Unless you have a business and you're able to qualify for tax deductions, you still want to file for the standard deduction from this angle because most of the time it's more than enough. Sometimes people say that they itemize just because they pay tithes and offerings or they donated to a charitable organization. But when you do the math, it doesn't compete with the $24,800. So in most cases, and I'm not speaking for everyone, but in most cases, the standard deduction is the amount that's worth choosing. So I won't click on the itemized deductions other than just to let you see what some of those itemized deductions may entail. And just kind of give you an example of what I mean by how the standard deduction is usually better. So right here it says medical and dental expenses, taxes you pay. And if you hit the question mark on each one, it'll elaborate on specifically what they're talking about. Casualty loss, gifts and charity, and that's what many people expect to claim on the itemization. Qualified interest that you pay. So you see the list. Now, the problem is many times when people enter in all of these numbers, it's not more than the $24,800. So if it's not more, then it's not worth entering. Otherwise, you miss out on the standard deduction that serves you with the most monetary or tax benefits. So I'm just click take the standard deduction, hit next, tax credit. Tax credits are amounts you subtract directly from your tax obligation. Would you like to learn more about tax credits you may be eligible for to get your results without tax credit or get your results without tax credit? So I'm just going to click on it and just show you some of the things that are here. If you think these are something you may qualify for, of course you can hit the plus sign and expound and you can dive in a little deeper. But for this example, I'm just going to hit get my results without tax credit so I can just show you the power in this. So here it is. If you do not change your withholdings, you are likely to get a refund. So a person who gets a refund typically has overpaid in their taxes. But let's dive in and dissect it a little bit. It says expected tax withholding. So throughout the year, the expected tax withholding is $9,600. So if they continue to get taxed $400 a month, then after a year's amount of time, they would have paid $4,800 in taxes. And then since they're married, that totals up to $9,600 that they paid in taxes. However, the anticipated tax obligation based on their scenario, their anticipated tax obligation is $8,152, which means that it's an overpayment of $1,448, just based on this example. So right here it says, happy with your results, then you don't need to do anything. Want to adjust your results, then you can use the slider. So basically, if a person is okay with getting $1,000 refund or $1,400 refund, then they don't have to change anything, and all they have to do is scroll down and just make sure everything looks appropriate, and they can print it out, and it'll be basically there for their records, and then they can turn in the pre-filled out W-4 and basically get, or they don't have to change anything, they're just keeping it for their records. However, if you determine that, you know what, I don't want to pay anything in taxes, and I want to keep more of my money throughout the year. So let's just say that that's the case. That you want to, well, this is a person who says they want to pay in a little more and not worry about getting taxed. So basically, the slider allows you to determine how much you like to get in the form of a refund. So if a person wants to get more in the form of a refund, $4,000, then they will end up paying more throughout the year in order to solidify them getting a $4,000 refund. However, most people who want to increase their cash flow are going to say, you know what, I don't want to pay anything. I want to break even with the IRS. I want to break even with the government. So basically right here it says for a refund of approximately zero, meaning you break even. You don't owe them, they don't owe you. To get your desired refund amount, you would need $328 withheld from each pension payment, $72 less than your current tax withholding. So basically, you will get an increase of $72 per month because you decided that you don't want anything taken out in taxes, and that will increase your pension payment. Most people who are overpaying in taxes overpay to the tune of $200 to $800 a month. Like I said, this is just an example. So most people, if they hit zero, this may say $400. This may say $1,000. This may say $100. In this case, I just did a rough example, and it says $72. So they get a pay increase or a cash flow increase of $72, and then they're less likely to owe the government because everything breaks even. And then it tells you, if you decide that you want to put in zero or receive no refund and break even with the government, then basically you hit step one, check and see if your employer does this via paper or online, and you can update it there. You can complete the new Form W-4P online or via paper as follows, and it tells you how to fill it out based on your scenario. And you do this for yourself as well as for your spouse, and then you give it to your pension provider as soon as possible. So once you put it in or fill out this W-4P, as they stated, which if you do it according to this, it'll already be pre-filled. Like they said, it'll be already pre-filled. So if you do it according to this, it'll already be pre-filled, and you just turn it in to your W-4P provider as soon as possible. So that's it in a nutshell. If you go through this W-4P, many times people are leaving a lot more than $72 on the table. It's $200 to $800 in most cases for people who work jobs, and sometimes it's identical for a person who does not work a job, but they're retired and they're receiving some form of a pension that is being taxed. And basically, just so you can see the difference in the slider. If a person said, you know what, I want to get a larger refund, because some people prefer to get a larger refund. We don't recommend that because that's money you could have used throughout the year that could have went towards investing, that could have went towards lifestyle, that could have went towards paying off debt. It's a lot of different things that could have gone towards as it relates to your money. So we don't recommend getting a large refund at the end of the year. We just recommend strategically using that extra cash flow and doing some great things with it. However, if a person decides that they want a large refund, then they would just have to pay extra in per month. So that would cause your monthly paycheck, your monthly pension to decrease. And that's not what this video is about. Just wanted to show you the difference. So either A, you keep it the same if you're happy with it, or you say, you know what, I want a smaller refund so I can get a larger paycheck every single month. So I hope this makes sense. Share this with somebody that you feel may benefit, because there's a lot of people who are retired who do not realize that this is an option. Even people who are in the military. If you're in the military, you have what's called the MyPay system, and then MyPay system allows you to update your withholding online. And if you still have access to it as you retire, then guess what? You're able to make sure you're paying the legal minimum in taxes without you having to have the stress of on the government, on the IRS. 'Cause nobody wants to be in that place, but at least you'll be educated on how to make it work for you based on your ultimate goals as a retired individual. So share this with somebody you feel may benefit, or if this has benefited you, it'll give us a like, a comment, subscribe, whatever the case may be. Or if this doesn't fit your example and you actually do have a job, then we have quite a few other W4 videos that you can check out if you just scroll down our video, and it's helping a ton of people, and I'm sure they help you as well. So subscribe. We got a lot of good things up the pipeline, and if you have an example of something that you would like us to do an example of, put it in the comments, and we don't mind if it's something that we haven't done already, add it to the channel. So be sure to subscribe so you can see if we cover a scenario that fits you. That's all I have for now. Mr. Smith, point 5 of Mr. and Mrs. Smith, signing out.